Hi there, welcome to Kneppy Invest. An interesting, exciting video I have in store for you today. Well, I hope you find it exciting because in today's video, I'll be giving you a brief insight to a new investing strategy that I have implemented in the past few weeks. Not only that, I'll give you or show you some initial results. And we'll also look at some interesting charts on the ASX, and most of these charts we'll be looking at are relevant to my new investing strategy. But before we go there, let's have a look at some tweets, a Facebook post, also an email that I found intriguing in the past week. And the first one is a Facebook post that is not at all anything to do with investing. This is actually a quote from a forest ranger at Yosemite National Park in relation to why it's hard to design perfect garbage bins to keep bears from breaking into it. Now, my favorite animal on the planet is bears. Black bears, brown bears, or grizzly bears, polar bears. I love them all. And the main reason I'm fascinated by bears is because when I was 6 years old, I was bitten by a bear. Now, when I say bitten by a bear, the correct way to say that, so I'm sort of embellishing it. The correct way to say it is my finger was in the bear cub's mouth. Did not bite down on my finger, but I yanked my finger out of the bear cub's mouth, and bear cub's teeth tend to be quite sharp, and it just ripped apart my finger. So I had to go to the hospital, get stitches, that sort of thing. But ever since then, I have been absolutely fascinated by bears. Now, another reason I absolutely love bears is because how intelligent they are. I've seen bears break into cars, just opening the car doors, break into houses just by opening the doors in houses. They can break into anything. So it's very important if you are traveling in particularly Western United States, Western Canada, that particularly if you are camping, that you need to put the food away from where bears can get it. So into bins. And when I say bins, not bins you throw away, but these lockers sort of stuff. But not all tourists do that. So tourists tend to be quite ignorant when it comes to bears. So this is a quote from a foreign stranger. There is a considerable overlap between the intelligence of the smartest bears and the dumbest tourists. Now, I don't sort of agree with dumbest tourists. I think the best word there is ignorant tourists. And I do find a lot of tourists tend to be quite ignorant and they'll just leave their food anywhere. I've seen the first time I was in Yosemite, I not saw with my own two eyes, but there was a car broken into by a bear because they left food in the car. You just don't do that because if you leave food in the car, bears will get to it. So you have to put the food into these lockers, bear-proof lockers, that sort of thing. But they are finding it hard to build completely bear-proof lockers. So even though that quote is not relevant to investing, I just love it. I've seen this quote so many times. I'm not even sure if it's true, but there is some truth to it. Anyway, next on to an email from Meta. And this was in regards to Threads. Who signed up to Threads? I did. And one of the reasons I did was to see what it was like. And this is the hours to reach 10 million users, comparing Facebook, Twitter, Instagram, ChatGPT, Google+, and Threads. Facebook took 20,000 hours to get to 10 million users. Twitter, 18.7 thousand hours. Instagram, 8.5 thousand hours. ChatGPT, 960 hours to get to 10 million users. Google+, 384. Threads, 7 hours. Not only that, Threads' early engagement has been impressive. Within 24 hours of launch, 95 million threads attracted 190 million likes. So maybe Threads will become a Twitter killer. That said, the battle has just begun, and to succeed as a Twitter killer, Meta seems to be betting that user friends group will feature and debate the news, blah, blah, blah. Well, remains to be seen. Fairly similar to Twitter. And to be honest with you, I downloaded the Threads app, and that's the only time I've used it, just by looking at it. Now onto Twitter. Interesting tweets on, actually, we won't look at that one. That's just something the South Park creators talked about or mentioned in a talk in regards to what makes a good story. So not really relevant to this video, but a really good explanation on what makes a really good story. And I think I just save that one for my own personal use. Now onto some really interesting tweets. This one's from Ottavio Costa, who tends to be a bit of a bear, also a commodity bug, gold bug, that sort of thing. Talking about the weight of the top 10 stocks in the S&P 500. So in fact, if I do this, and this is looking at the weight. So right now, the top 10 stocks in the S&P 500 account for 31.7% of the total S&P 500. Yet when you look at the earnings, it only accounts for 21.5%, which is at a fairly, it's not sort of an average range, but at 31.7% weighting is a record weighting right now. So what he's saying is the reason we've seen a run up in those mega cap companies on the NASDAQ S&P 500 is not because of financial growth, it's because of multiple expansion. The market is willing to pay more and more a premium for those companies. Maybe the market will always have a premium for those companies, but there is more risk now to holding those companies. We need the market, well, maybe not the market, but I would like to see some really good financial growth from NVIDIA, Alphabet, Apple, those sort of companies to justify the run-up we've seen in the NASDAQ and S&P 500 in these 10 companies over the past 6 months or so. The next one is chart speaks louder than words. This is from Michael Cantro, talking about the PEG ratio and how it's at extremely elevated levels. So this is looking at the past 30 years almost, and the PEG, apart from a brief time in 2020, has never been higher. So for those who don't know what the PEG ratio is, it's just a PE ratio looking at growth. So it's sort of an expectation, and this just is sort of telling us that maybe the market or the S&P 500 is a little bit overvalued right now based off expected growth. So that's definitely an argument when you're looking at the S&P 500 and the American markets. And another reason why, again, main reason we've seen the share prices of many of these companies go up is not because of financial growth, it's because of multiple expansion. Another way to look at it is the market expects really good financial growth from these companies in the next few years. Otherwise, they are overdoing it. They are running too hot. Next one is trying to understand this more and more. So this is from John P. Husman. He has a PhD because it's in his name. Our estimate of S&P 500 equity risk premium, negative 7.2%. So comparing the future or expected future returns of the S&P 500 over the next 10 years compared to Treasury bonds. And what they're saying is that the S&P 500 is overvalued right now and don't expect much return from the S&P 500 compared to Treasury bonds. It even says here, not that Treasury yields are great either. The last time this number has been so low, negative 7.2%, was in March 2000, which was a bubble, and August 1929, which was also a bubble, just before we saw significant sell-offs. So what they're saying here is, don't be surprised if you see a significant sell-off in equity markets. And this data goes all the way back to 1928. So 95 years of history, only twice has this equity risk premium been so low. Cool. Now to another really strong bear. So the reason I'm looking at these bears is because I am more of a bull than a bear. So I want my thoughts to be challenged. And Stephen Van Meter always challenges my thought because he's an ultra bear, but he's been ultra bear forever. Sort of like Jeremy Grantham. I love to watch or listen to Jeremy Grantham because he's a complete opposite to me. Anyway, so the next few months are going to be brutal for the economy. Now, who knows? It may be okay. I don't know. We really need to see unemployment start increasing for me to come to the conclusion that it's going to be brutal for the economy. If we don't see unemployment rising significantly, then it may not be brutal for the economy at all, although some people with mortgages might absolutely disagree with me. And, I should have actually said this first. Congratulations to Michelle Bullock, who is the next RBA governor. Michelle with one L, silly parent. Although maybe that's the correct way to spell it in some cultures. Maybe she's not from Western culture. Although Bullock tells me, yeah, maybe she's related to Sandra. should ask Michelle Bullock how Sandra's going. Look, I did look at her history. Is this going to be good hire? Who knows? There's no. I just think that it's just a name. The governor's just a name, and I think most of the work is done by people below the governor. So I have no opinion on this hire. It could be a really good hire, really bad hire, but I think in generally the governors of the Reserve Bank are just sort of, I wouldn't say puppets, but they don't have as much say as you might think. And this is a really good. I should have mentioned this one also. I'll leave that to last. This is a really good tweet. And the main thing I want to talk about this tweet is just a bit of philosophy here. So this is ASX Peasant, talking about results in the last financial year, saying he was wrong most of the time. So 35% of the trades were winning, 65% wrong, but then there's risk management. Winning trades are average 350% larger than losses. Cut losses early, let winners run. Result is a net 38% portfolio gain for the financial year. Cut losses earlier, let winners run. Some investors do the complete opposite. They take their profits early, let their losers run, go down and down and down. So they see the losers down 90%. And the winners, they take 20 to 30% profit. It's interesting because in my new investing strategy, that is my theme. Cut losses early, let your winners run. But my ideal gain is 20 to 30%. And I'll talk about that more in a second. Went through these lessons here, but there were some lessons I didn't agree with, but that's not relevant for this video. Anyway, this is about incoming heat wave in Europe, going to be particularly intense, which is funny enough because there's also a particularly intense heat wave in the United States. Now, when we say United States and Europe, just parts of the continent, not the whole continents, are going to be experiencing intense heat waves. And this is a problem I have with a lot of people out there. They're so self-absorbed that if they're having a cold day, everyone else must be having a cold day. And they equate their climate that particular day. When I say climate, it's actually wrong. It's weather. There is a difference between weather and climate, a fairly big difference. But if they have a cold morning, climate change wrong. World's not warming up because they had a cold morning. That's self-absorbed. Don't be a self-absorbed person who believes just because you're having a cold morning or even a warm, coolish day, that the rest of the world must be experiencing the same thing. It's completely wrong. And I have heard quite a few times in the past few months, we've had a cold morning. What's happened to climate change? Blah, blah, blah. A cold morning is a function of cloud cover, wind, and moisture in the atmosphere. So just think of a desert. What happens with the temperature, the diurnal range in temperature in a desert? So you get these really warm days and then the nights cool off quite easily. And that's because of the moisture content in the atmosphere. So right now, the reason we're having these really cold mornings is mostly because of a lack of moisture content in the atmosphere. And what's happening soon? El Nino. And what happens in El Ninos in Australia? Lack of rainfall. Why is there a lack of rainfall? Lack of moisture in the atmosphere. This is another reason why we have these really hot days on El Ninos, because of lower moisture content than normal. So I do expect significant heat waves in Australia in the next few years, particularly if El Nino is fairly strong. So don't be one of those people who wakes up to a cold morning and think climate change is wrong because you're experiencing a cold morning. It's self-absorption. I've been around the world and have seen the effects of climate change. Don't be one of those ignorant people who don't believe in climate change just because Alan Jones says climate change is not real. He gets paid a lot of money from energy companies. I'm thinking he probably would. Either he's an idiot not believing in climate change, or he gets a lot of money from energy companies. Anyway, rant over. Okay, so my new investing strategy, which is looking at hourly trades. So looking at hourly charts. So traditionally, when I was an investor, when I first started investing well over 10 years ago, it was all about finding high quality companies, good value, and holding them for the long term, which is a good strategy. And in fact, when I look at the majority of companies in my portfolio, if I just add up all the portfolios together, the majority of companies I have are these high quality companies that I did buy at maybe good value, good to okay value. But about 7 or 8 years ago, or maybe a little bit longer than that. Now, I am a curious person. I don't accept things I'm told. I will question things. I'm very curious. So even though you get told time and time again that technical analysis is wrong, it doesn't work, I question that. I still question it. And if I hear, say, Scott Phillips, Andrew Page, what's his name from the core, Gurov, say technical analysis is rubbish, I question that. And I think you've got to keep an open mind when it comes to investing. Not only investing, to life. So I started researching technical analysis about 8 years ago or so, and I found there was some validity, possible validity to technical analysis. But I had to see it with my own eyes, and I still remember that ha moment. It was back in 2014 or 15 with a company called M2 Communications. I won't go into the whole story, but I saw technical analysis work at that point in time, and I've started to use it more and more in my investing, to the point where a few years ago, I started a new investing strategy based off daily charts, based off momentum and trends, also use ASX announcements as well. And I also decided to dabble in day trading, but I did not like day trading. I think you need the temperament, the right temperament and personality for day trading, and I don't have that temperament. Found it a little bit too stressful simply because you had to focus on trading all throughout the trading day. Maybe I was doing it wrong. And then I thought, yeah, maybe just using daily charts, thinking about 6 months to a year time frame was best when it comes to technical analysis. Then I started looking at hourly charts more and more. This was a few months ago, and I noticed some patterns, fairly similar patterns to daily charts. And there are a few companies that I could have bought into just by looking at the daily chart, and I refused to because it didn't fit into some of my rules. But I could have actually made a short-term profit. When I say a short-term, maybe over a month period, I could have gained 10 to 20%. I thought maybe this is a strategy I could employ in the future. So I started looking at this strategy about a month ago. And in the past, or since the 1st of July, I've really gone full into the strategy, particularly in the past week. And it has worked. So I have started using ShareSite again. From the 1st of July, I'm using my 3 strategies now. So let's have a look at my long-term strategy. So these are companies I think I'm just going to own for the long term. Not all these are high quality companies, but at this point in time, since the 1st of July, this strategy is up 2.74%, capital gain 3.4%, but a currency loss of 0.64% because I do own a lot of international companies. Now compare that to the STW, my benchmark, we are seeing almost double gains. If you take away the currency, more than double gains in this long-term portfolio. That is exactly what I want to see. Now, we're only 2 weeks into the financial year, but this is what I want so far. Now, my trading strategy is just based off daily charts. So I'm going to incorporate my daily trading strategy into my hourly trading strategy because I have quite a few companies here that I want to own for as long as possible. Those companies include Dropsuite, Doug, Duratech, IPG or IPD Group, Johns Lyng Group, Select Harvest, which is more a long-term trade, anticipating almond prices will increase, Venture Services, XRF Scientific. So a lot of these companies I want to own for the longer term, but I still will use my hourly rules within this strategy as well. So this particular strategy is up 3.03% compared to the S&TW, which is up 1.4. So double the market returns. That's exactly what I want. So let's have a look at my returns so far. Whoops. In the hourly strategy. So up 8.52%. So we're talking about quadruple, more than quadruple. That's 2.9, 5.8, 6 times. 6 times. So this is 6 times the benchmark at this point in time. Now it's early stages. So, and we had a really good week on the XGO, and in fact, no companies are in the red apart from one, Tyro Payments, but that's because I include a brokerage and that's only down $5 because $5 brokerage, but everything else is up. And not only that, I've taken profits. I've already taken profits in two of the companies, Electro-Optics and Mesoblast. The reason I took profits in both of those companies because they were up 28%, 26%. So one of my rules is, and this is not an absolute rule, take profits if the share price is up 20 to 30% in a short period of time. So ideally, I want to let these winners run as much as possible. But both these companies saw a staggering increase in share price in a fairly short period of time. And I'm anticipating a drops in the share price of both these companies in the next week. So if we have a look at Mesoblast, this is the hourly chart. Look at the hourly chart now. We saw the share price of this company increase from about $1.10 to $1.40 in 1 week. When I see that sort of explosion in share price, I want to take profits in anticipation the share price might drop. If the share price falls back to $1.15, $1.20, I might take another position in the company. The reason I did this for Mesoblast is we have seen this happen time and time again over the past few months. We have seen massive run up in share price and the share price collapses. Massive run up in share price collapses. So I'm anticipating the same thing will happen. Now, it could go horribly wrong for me, and the share price could keep on increasing. Maybe the company releases some good news, but it's okay. I've taken my profits at 28%. And the reason this would work, this strategy works, is because I'm limiting my losses. For all these companies, I put in a stop loss. So if the share price falls to this point, I will sell out. So why this strategy works, and this is very relevant to that peasant tweet, is you keep your losses low, so 5% loss, and you let your units run. So if I'm aiming between 20 to 30%, win for all my gains, and if I'm successful in 60% of my trades, so that is one of my not one of my rules, but one of my aims is to be right 60% of the time. And if I do take profits between 20 and 30%, this will be a successful strategy. And so far, it is working. So the other companies I've taken position in right now include Bravura, Kogan, Downer, Megaport, Integrated Research, A2 Milk, Collins Food, and Tyro. Now, some of those companies have released some positive announcements during the week. So that is one thing I'm looking for. I'm looking for positive announcements and then ride that short-term sentiment after those positive announcements. And another thing I'm doing is I'm taking positions, these short-term positions, in companies I'm owning for the long term. So I have a core holding, and then I'll take a trading position in the company in the hope I am profitable in that trading position. And I'm looking at possibly adding to my core portfolio if I'm successful in that short-term position. For example, CSL, I have a core holding in that company. Say I have 100 shares in that company, and if I take a trade, and CSL could be relevant right now, I am paying particular attention to CSL because the share price has absolutely tanked. This is the hourly chart. Share price has fallen from $310 to a current share price of $260. So we're talking about a 25% drop in share price. So I'm looking for first signs of a turnaround in the hourly chart. We have no signs right now. And if I see a turnaround in the hourly chart, I might take a position, say at $260. And then if the share price goes back up to $310, just made a 33% gain in CSL. And instead of selling out all of my position in that trading, I might add some of that gain to my core portfolio. So if I had 100 shares, I might increase that to 102. That makes sense. So, for example, if I bought some shares at CSL for 260, share price goes up to 320. Instead of selling out all of my holdings, my trading holdings, I will sell out some and increase my long-term holding in that company, if that makes sense. Hopefully that makes sense. If it doesn't make sense, just leave a comment and maybe I can do another video on that particular part of my strategy. So in this hourly trade, the most important point is having a stop loss. When will I sell out when this particular thesis of this trade fails? So stop losses are very important. So for example, Mesoblast, my stop loss was $1.12. For Electro-Optics, another reason I sold Electro-Optics, we saw a massive run up in share price. I held this company for 2 days, 26% gain. My stop loss was 80 cents, so it's well above that right now, so don't have to worry about that. and it's so really good volume. So I'm just hoping share price of Electro-Optics comes down to say 95 cents, maybe 97.5 cents, and then maybe I'll jump back in. Genus Plus, I'm not sure about Genus Plus because one of my rules, and I have to write down my rules. I want this to be a rule-based strategy. Not only a rule-based strategy, I want the rules written down so I can follow. So keep the emotions completely out of it. And I think one of my rules, and I haven't written down these rules yet, one of my rules must be liquidity. I want to only own, in this strategy, buy companies where there is good liquidity. And Genus Plus might fail out of that particular rule because this is a liquid traded company. But share price has moved into not only a daily uptrend, but also an hourly uptrend, which is also very important when it comes to one of my rules in the future. So stop loss there, $2. Kogan, when you look at the hourly chart, it is developing into a really nice uptrend, not only hourly uptrend, but when you look at the daily uptrend, developing into a beautiful daily uptrend as well. So this is a more powerful trade. When you see a share price in a daily uptrend, also an hourly uptrend, I think that is more significant. Stop loss there, 475. Downer just has gone crazy. So beautiful daily chart here. Stop loss $4.05. I think I'm up downer. I'm up downer right now, 8.7%. Megaport 9.7%. So not thinking of taking profits for those companies just yet. The other one was Megaport, and the reason I bought Megaport was because of that really good trading update, whatever it was. So easy stop loss, $8. I bought in just above $8, and I ride that as long as possible. Integrated Research, they release a good trading update. Stop loss is 42 cents. There was a little bit of selling. You can see a bit of, I've talked about this in my weekly wrap up, but I think there was a fund manager selling out. We saw some spikes, 4 spikes, and no spikes after the last one. So possibly the fund manager who's selling out, just taking profits or getting out of the company, may have stopped. And I think if they have stopped selling, share price could go on a run. A2 Milk, this company is in my long-term portfolio, and this is just a daily. This is just an hourly trade. So if you look at the daily chart, share price has not turned into an uptrend. Look in the daily chart. So I think there's more risk in this scenario, but the share price went above $5.10, and that was my buy-in price. So for all these trades, I'm looking for a signal. In fact, I'll show you I have a list of companies here that I'm following over the next week. And for all these companies, I've got a price. So for A2 Milk, what I was waiting for was a breakout above $5.10. And as soon as I saw that breakout, I took a position. The share price has rallied a little bit further on. So it's gone from $5.10 to $5.20. Collins Foods released a pretty good report. And I think that catalyst for taking a position, I should be doing more and more. Stop loss $9.50. You can just see the downtrend in the share price for Collins Foods has been broken. My line's pretty bad there. That's a better line. It's broken. And the share price has maintained at these levels between $9.50 and $10. And the last company I took a trading position was Tyro. Again, when you look at the daily chart, not an uptrend, but when you look at the 1 hourly chart, we have seen some interest in this company, and the share price has moved into 1 hourly uptrend. Now, I do have a long-term position in this company as well, and I would like to add to that position. Now, on to some interesting charts I have looked at or found in the past few days. First one is Perseus. So this is exactly what I'm looking for. Perseus share price has been in a 1 hourly downtrend since the 14th of April. Share price has dropped from $2.50 all the way now to a current share price of $1.82, potentially broken out in the past few trading days. If I take a position at $1.80, possibly if it gets up to $2.50, that's sort of like what I'll be aiming for. But that's what this is the sort of chart I'm looking for. Temple Webster. So I did have a breakout at $6. So share price broke out. I missed it, should have taken position, but we have seen a little bit of a pullback in the share price, and it's gone down to $6.20. So I would be thinking about taking a position at $6.20. So really nice developing uptrend. Looking at the 1 hourly chart. On the daily chart, it's moving. It's broken above a really strong resistance level at $6. So that's another reason why I'm thinking of taking this position in this company, because we've seen a breakout in the daily chart, and also the 1 hourly chart is looking really good. Another company called MLG Oz looks really good on the hourly chart. But again, I think liquidity could be an issue with this company. Cobalt, so close to taking a position in this company. So my previous week, so every week I'll be doing these. So my previous week I put 36.5 cents, and this was on here. So sort of a little bit of a pullback. And then after I saw the share price increasing, I went, oh, I'll buy in at 36.5 cents. When the share price was 37 cents, share price went from 37 cents to 49 cents. This could have been another case of in and out very quickly, like Electro-Optics. We've talked about CSL, other companies here. Max 7, I missed this one. So there must have been some good news released on the 3rd of July around then, because the share price has really taken off. This is exactly what I'm looking for in the 1 hourly chart. If you look at the daily chart, yeah, taken off for 2, looked like a bit of a breakout there. And the reason I say it's a breakout, if you just look at the previous highs, there it is, just draw a line, previous highs. You can see share price was really struggling to get above 77.5 cents. It totally went above that. DGL, another company I had a little sneaky bit in on the daily chart. When you look at the weekly or on the hourly chart, when you look at the daily chart, still in the downtrend. But when you look at the hourly chart, there has been some interest in this company in the past few days, but low volume. You can see massive volume going back from about the 15th of June through to the 28th of June, and we've seen decreasing volume, which tells me little strength. Swoop. I had Swoop just based off this hourly. You can see the hourly chart getting into an uptrend. I was thinking of maybe taking a position at around about 24 cents, this little breakout. But again, liquidity held me back. And the share price went from 24 cents to about 43 cents, almost in 1 hour. And then the share price has pulled back. Zero, classic case of the chart being in 1 hourly uptrend. Look at that, beautiful 1 hourly uptrend. It's been in 1 hourly uptrend since the 9th of March. I think I might have been a shareholder at that point in time. And then you look at the daily chart. Beautiful developing trend there. EML was another one. Now, this is really interesting. So when you look at the day 1 hourly chart for EML payments, the previous high was around about 83 cents. And then we just saw the share price take off for the past week or so. Really high volume coming in as well. Really good volume. So someone is interested, fund manager is interested in this company. But what happens at around 83 cents, the previous high? This is technical analysis works. Share price is really struggling to go above 83 cents because that's a resistance level. Traders know that's a resistance level, and they are selling. There's a bit of supply, extra supply, because they know it's a resistance level. There was no problem for the share price of this company to go from 69 cents to 83 cents. In fact, it happened in about 5-6 hours. In the last 5 or 6 hours, it's just gone sideways. So that is resistance. So for email payments, we want to see the share price get to about 85 cents. We'd love to see some really good volume coming in as well. Wouldn't be surprised to see the share price fall back to, say, 72 cents. If I see the share price fall to 72 cents, might be a sneaky buy. Frontier Digital could be a nice little sneaky buy just on the 1 hourly chart. Looks like the downtrend has come to an end. But again, on the daily chart, did I say 1 hourly chart? But on the daily chart, still in the downtrend. So if I was just looking at the daily chart on my own strategy, I would not even be thinking about buying Frontier Digitals. But if I look at the 1 hourly chart, possibly a change in trend. So subtly, just looking at these different time frames, you get subtly different opinions. SiteMinder, just put SiteMinder because what's happened on the daily or 1 hourly chart, share price has really taken off. But if we look at the daily chart, yeah, I'm not that excited with the daily chart. So one thing I have not talked about is the XGO, NASDAQ, and blah, 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 and Bitcoin. So let's have a look at that now. Usually I do this first. So if we look at the 1 hourly chart. The main thing to take away from the XGO is just the volatility. Massive volatility really since about the 9th of June. We've seen really good periods, really bad periods, really good period, really bad period, really good period. So we've seen 1, 2, 3 really good periods and 2 really bad periods. And this makes me think more than likely the next period is going to be a bad period. And you can see it in the weekly chart. We've seen the XGO go up and down. So up 1 week, down the next week. Up 1 week, down the next week. Up 1 week, big 3.7% in the past week. Will we see another down week this week? Is this going to be a bad week for the XGO based off the last 5 weeks? Yes, but who knows? Just because it's been happening in the last 5 weeks doesn't mean it'll happen again. But again, the main thing with the XGO, it's right in the middle of the trading range. You could go higher, could go lower. There's no trend at all in the Australian markets. Can't say the same thing about the NASDAQ. It's still in an uptrend. So look at the daily chart here. It's gone past the old resistance level. It's now support. Took a little bit of time to get past it. So from the 16th of June to the almost a month. So it took a month to get past that resistance level at about 15,245. Now, speaking of resistance level, the Dow Jones is really struggling to get above this resistance level at 34,400. So it's 1, 2, 3, 4, 5, 6, 7, 8 times in the past. It's tried to get above level and pulled back. Now the Dow Jones is just above that resistance level. So if we get to that, say 35,000, I think we can confirm that resistance level has been broken. And the last thing I'm going to show you in today's video is Bitcoin. I think the main reason I want to show you Bitcoin, so there is a resistance level there. You just see it. It's just struggling. It's just going sideways. But if you look at the 1 hourly, something happened with Bitcoin at 3 a.m. Saturday morning our time and 4 a.m. Saturday morning. Bitcoin fell 1.6% in 1 hour and then 1.9% the next hour. And you just see a massive drop in Bitcoin in that 1 hour, and it's gone sideways ever since then. Not sure what happened then, but this is just Bitcoin. A lot of volatility. Well, not a lot of volatility, but it's just going sideways right on that resistance level. Bulls and bears are fighting right now when it comes to Bitcoin, and no one's winning. Anyway, I think that's all I have in regards to this video. If you want more information on my new investing strategy, just leave your thoughts in the comment section, and maybe I'll do more videos on it. And more than likely, what I would do is a video showing you the rules I've implemented. So I've got to write down these rules. Have most of these rules already in my mind, but I think I need to write them down. And the other thing, most important thing when it comes to my investing strategy is to have a sell strategy. When will I sell out if the share price drops? My thesis is flawed or is wrong, or sell point if the share price goes up. So I've already used that strategy. So my ultimate aim is to have 20 to 30% gains in these trades. But I don't necessarily want to sell out if I see that 20 30% rise, because I want to let these winners run like I've been doing with some of my trades, daily trades. Like for instance, Drop Suite is up over 100%. Duratech up 100%. Doug is up about 80% since I bought in. So I've let those winners run. And this is very important. Maybe I won't talk about this. Maybe I'll talk about that in the next. I was going to look at Duratech's hourly chart, compare it to the daily chart. It's very important that there is little differences there. In fact, if I was just looking at an hourly chart, I might have sold out of Duratech twice in the past 6 months when I would have just kept on holding if I was just looking at the daily chart. Anyway, so if you have any questions, just leave those questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.